Gold prices are modestly lower this Thursday. Here to talk about the gold landscape is Jim Wyckoff. Jim, thanks for joining us.
Good morning, Daniela. Always nice to be with you.
All right, Jim. Well, it seems the bounce on the U.S. dollar index has placed gold bulls once again on the defensive.
Indeed, Daniela. As we see late this week, we are reminded that gold and silver markets are held hostage by the machinations on a daily basis of the U.S. dollar index. And here the past couple of days, we've seen a solid rebound in the dollar index to give the greenback bulls a bit of technical momentum and at the same time deflate the technical momentum that gold and silver bulls had worked so hard to get the past couple of weeks.
So what's the forecast looking like for gold?
Well, Daniela, the bears do have the near-term technical advantage, and that means the path of least resistance for prices is sideways to lower. Same goes with silver.
Taking a closer look at those FOMC minutes now, Jim, many analysts I had spoken to said they would be surprised if we would see a Fed rate hike this year, noting that the Fed really doesn't have a reason to raise rates. But if we look at those minutes, don't they suggest that a June, July, or September rate hike are still in play?
Daniela, those FOMC minutes on Wednesday afternoon, in my mind, only added more uncertainty to an already uncertain marketplace regarding what the Fed is going to do with interest rates this year. In fact, it was funny. The gold market, in the immediate aftermath of the FOMC minutes release, really didn't do anything. Then about 10 or 15 minutes later, decided to sell off when the dollar index rallied. Interestingly, overnight in Europe, European stock markets rallied on ideas that the Fed will hold off on raising interest rates. So they deemed the FOMC minutes as a bit dovish. Then you look at the dollar index overnight, and as we speak today, it's stronger, and traders are viewing the Forex traders anyway, are viewing the FOMC minutes as a bit hawkish. So we've really just created or added to uncertainty in the marketplace on what the Fed is going to do. What is important is, I think, as the Fed officials have said, the Fed is data dependent. The upcoming major economic reports, U.S. economic reports that we see in the next few weeks or next couple of months are really going to probably do a lot to determine what the Fed does with interest rates later this year. So the next unemployment report in early May and early June can be very, very important for the marketplace.
All right, let's get to your Wyckoff market reading now for gold and silver.
Daniela, I'm giving June COMEX gold futures a Wyckoff market rating of 2.5. Bears in firm near-term technical control. Solid overhead resistance at this week's high of 1224.50. Solid support at the recent low of 1178.20. Looking at May COMEX silver futures, that's also got a Wyckoff market rating of 2.5, fully in the bearish camp, down from last week. Solid overhead resistance at 17, solid support at 16, Daniela.
Thanks so much, Jim.
You bet, Daniela. Can't wait till next time. Bye-bye.
And thanks for watching this edition of Technically Speaking. We'll see you tomorrow with Chart This and Gary Wagner. Thanks for watching.